you guys know that I like to identify where are our tops and bottoms, and I measure the heck out of it. It's called retracement analysis. And, I use a moving average crossing. A lot of people use moving average crossings for their trade signals and things like that. It's straightforward. Sip, can I show you an easy way? And I want to show all the people as well an easy way to really see when a moving average crossing happens. Because when I here the moving average crossing that I use on my broad market charts is the 3 and 5 day exponential moving average. So I'm going to go ahead and turn that on right here. Let's see if I can pull that up, turn it on. And so when you're looking at moving average crossings, especially on a price chart, sometimes it's really hard to see, did I get a crossing? Did I not get a crossing? So I want to teach you guys really quick how to really make it easy to see. So the trick here is we're going to use something called the moving average convergence divergence indicator and use it to magnify moving average crossings. So I've got one right here. And what you can see is this is how if you want to know if you've got a good moving average crossing and you want to be able to see it clearly, you put your two moving averages in the fast and the slow length. So when you're configuring your MACD, if you're using the 3 and the 5 like I am, you put the 3 and the 5. If you're using something else like the 50 and the 200, you could put that in there. Whatever two moving averages you compare, put that in there. And then for the MACD length, change that to 1. And, if you're using simple moving average crossings, you could throw that in. Exponential moving average crossings, weighted, whatever it be, you can go to town with that, right? So let me show you what that does for us. So instead of having to appear up here on our price chart, you now get this really clear secondary look and a little bit different. See, what you're seeing here is the difference between the two moving averages rather than trying to gauge the moving averages where they're both kind of moving and not grounded and you're trying to figure out what the heck. Now you can see it extra clearly and you can see, especially compared to previous moving average crossings, whether or not it's kind of a big moving average crossing or whether it's kind of a wimpy moving average crossing. You can evaluate it so much easier by separating it out from your price chart and looking at it this way. So I hope you guys all take a good look at it, because we had a moving average crossing on Wednesday. By the end of the day, Wednesday, we had that crossing. But I'm looking at it now, and if we, in the next day or two, jump back across the board here, rather than having a nice solid crossing, I think that we're going to be in trouble. I think that that's too wimpy of a moving average crossing to actually confirm. In other words, I think it'll be a false positive in that we've got higher highs to go to. So I'm watching this very carefully. But assuming that, Wednesday was a good moving average crossing, if we got a good moving average crossing on Wednesday, then on September 30th, that's our highest close to date. That would have been considered our reversal. So if we go with that and we don't, pedal it back because, we don't think that it's legit, and I'm still leaving the door open on that, and I'm going to be watching this MACD indicator I just set up. But if we do stick with that being a top reversal, what's that showing us? It's showing us what you talked about a little bit earlier, Sip, in that if we really did have this good uptrend that was forming, since the beginning of August, we would have actually had our price action kind of go all the way up to this ascending line of resistance. And instead, it stopped about 2/3 of the way. And so that tells me that, the sideways channeling is strong. I was very skeptical when the Fed did its interest rate drop. I was very skeptical of the technicals at least for that first week. And so I'm kind of seeing this correction and I'm wondering, were we misled about this uptrend? Are we actually sideways channeling? And I just want to put that doubt into people's minds right now about this uptrend because I don't want people just jumping into like swing trading and trying to trade this uptrend if it's not for real. And I don't know, and I don't think any technical analysis trader would tell you right now that they knew. If they did, they'd be soon perhaps changing their tune. So I want to be honest with you, it's going to take some time to materialize. So I don't want you jumping in on trades, especially longer duration trades, until the market kind of tells us what it's doing. Let's pull up our last thing here, which is my rulers. So if we did see that top back on September 30th, which was last Friday, and we're on our way down, these different pie slices, thresholds, I should say, we'll be looking at these carefully. So you may want to write down these numbers. So if we get a pullback to this 5,500, let's just say 5,550 to 5,625, I'm just rounding. If we get a pullback to that zone and then start heading back higher, well, I'm thinking that for the rest of the year, we're going to be seeing some more higher highs. Okay. If instead we dip down below that 5,550 number and we somewhere are in this red zone that I identified, I'm still sticking with my neutral bias. I'm going to be going for selling lots and lots of premium for the last quarter this year, making money on sideways chop, whatever I can do there. And I am going to be watching for this lower number, which is 5,300. I'm rounding 5,325. Put that in your notes. Getting below that, and I'm going to be forget the smooth landing, forget the Goldilocks situation. We're tumbling into a recession. So I'm watching those thresholds, and you guys should be too, for more evidence about what this market's in. And in the meantime, let's trade for shorter durations. Let's not plan out those 1 month, 2 month, even 5 month trades. For this month of October, I think I'm going to be trading, counting on shorter, terminations of those trades.